Welcome back to Making Money Matter, ladies and gentlemen, the real money show, not the currency show. And I've just over here in the New Orleans Investment Symposium, but saw some news out from our good friends at Kalamazoo Resources that they've done a scoping study for their Ashburton project, that Mt Olympus Gold Project in the Pilbara in Western Australia. The numbers, I want you to sit up and take some notice, but I know some of you out there will say, what is a scoping study? So before I get Luke to explain the numbers, I just want you all to understand it's also known as a PEA, a preliminary economic assessment. That kind of says it all. What it's doing is it's providing that sort of high-level economic assessment of a project. Is it viable? Is it valid? What are the numbers looking like? It's before they do a PFS, which is a pre-feasibility study, and a feasibility study. There's a lot that goes into making sure that a project is robust enough and the economics work before they do the intensive capital work. Am I right on that, Luke?
You've nailed it perfectly, Kerry.
Hey.
Well done.
And the reason I want people to understand this is because I want to talk to you. It's been a while since you've been on the channel. So before we go into the scoping study, because the numbers are quite frankly stunning and surprised me a lot, to be honest, give us the brief background to Kalamazoo, and then let's do a deep dive into the scoping study.
Yeah, thanks, Kerry. And I hope you're enjoying New Orleans as well.
I am.
Well, that's great. In regard to Kalamazoo, we own the Ashburton Gold Project, which is up in the Pilbara, 1.44 million ounces. And we've been looking to develop this over the last couple of years since we acquired it about 5 years ago. You might recall we actually entered into an option agreement with dore Mining in regard to this project. And the reason being that they were very keen on the resource at the Ashburton to actually go into their Hemi gold project, which they're developing. Then, of course, dore get taken over by Northern Star about 3 or 4 months ago. And Northern Star elected not to exercise the option, and which meant we got the project back after they'd spent more than 18 months, primarily dore, doing an enormous amount of work on this project, pretty much at pre-feasibility level stage. And so when we've got the project back, we've got all this data, all this information, and that's enabled us to fast track this scoping study. And you're absolutely correct. A scoping study is the first step before pre-feasibility. So over the last 3 or 4 months, we've put this scoping study together. And what it does, it establishes the optimal development pathway for this project in regard to the mining process, the actual the process plant, all the equipment, how it's developed, the exploration, the potential of it. And so we've outlined all of that in this scoping study, which has only been released in the last couple of days. So it looks really good, Kerry. But more importantly, what we've done in this gold environment is we've actually based it on a very conservative gold price. And that gold price in US dollar terms is just below $3,000. And in Australian dollar terms, it's 4,500. Which is well below this current spot price. But we thought we'd do that because we want this project to fly on just this project itself on a very low gold price that gives us an enormous amount of leverage and upside.
And I like that, because a lot of people are turning around and saying, the gold price could pull back even more. Look, I think it could just stay where it is for the moment, but I think it's great to be conservative, because I think that once we go through these numbers, people will see that this is going to be throwing off the cash even at those lower numbers.
Absolutely. And so I guess if you want to have a tagline, we think it's leverage to growth in both gold and resources, because we've based this scoping study and this development just on one resource, which is our open pit at Mt Olympus, which is the largest deposit. But there's extensive opportunity below that open pit, and also regionally, to make this a very long life project as well. And so we think that's the great leverage, Kerry. We've done it at a low gold price, but with enormous upside in regard to growth as well, in regard to resources.
Luke, I want to talk numbers in a moment, but you said before, excuse me, that there was some ownership between dore, and then dore gets taken over by Northern Star.
Yep.
Do you think they're sitting there now saying, whoopsies, we made a bit of a boo-boo here? Because why did they walk away?
Oh, it's a really interesting question, Kerry. And again, I'll just talk about the leverage on this. When we acquired this project in 2020, the Australian gold price was $2,500.
Right.
When we granted the option to De Grey to buy the project, the gold price was 3,100. When the option expired in late July, the gold price was 5,100. Today, it's 6,100. So the gold price is up 140% since we actually acquired this project. So would there be some seller's remorse? Well, potentially there might be in regard to Northern Star and obviously De Grey and not exercising this. We know De Grey were very keen to purchase this project under that option. But Northern Star, when they've acquired the Hemi project, they're obviously, as Australia's largest gold company, they're looking at the design and the production pathway for that project. So they're not going to rush the development of the Hemi, I wouldn't think. So Mt Olympus and the Ashburton didn't quite fit into their plans. But look, we're extremely pleased that that's occurred, because the gold price, again, has given us some enormous amount of leverage to develop this project. So yeah, we're very, very pleased where we're currently sitting.
Okay. In developing, because I think that's a picture of it in the background, a lot of people will be saying it's the Pilbara. You know what, Luke? I remember years and years ago, everyone saying there's no gold in the Pilbara. I don't know why you're bothering. And now it's really becoming quite an area for gold and gold exploration. But talk to us about infrastructure, because the scoping studies brought up some pretty stunning numbers, but people will always ask power, water, access.
Yeah, of course. And again, you look at this picture behind us, Kerry, you can see there's actually been a development there. So this is a brownfield site. And what that means, it was been previously in production. And that's given us an enormous amount of benefits. For example, we're on existing mining leases, right? So we don't have to go the process of getting the mining leases granted. There's a lot of existing infrastructure there. We've got a camp. There's a gas pipeline that runs through. There's a couple of very large major towns, mining towns, 30 kilometres away, which is Paraburdoo, and then Tom Price a little bit further. You've got Port Hedland and Karratha, 4 or 5 hours drive away. And these are very significant mining towns, because people predominantly think of the Pilbara as an iron ore country, but also there's a number of very significant gold mines that are either being built or about to get into production over the next couple of years. So we think we're in a great spot. So we've also, as part of the scoping study, we've gone through a whole range of environmental and permitting review. We don't see any showstoppers to actually get this into production fairly quickly. So again, if you're going to develop a gold mine, you want to do it on a brownfield site where it's you've had previous history and experience in getting it developed.
Okay, so let's talk the numbers of the scoping study, if you like. I don't know how much detail you want to go into, but I guess my audience is going to be looking at this, because I'll be honest, Kalamazoo has been a little bit slow off the take, if you like, in terms of the share price. I think the market has liked the news that's coming out, because the share price I think it's doubled in the last 12 months. But talk to us about the numbers and why you think people really should be sitting up and taking notice of. I forgot to say at the start, ladies and gentlemen, the ASX code is KZR. Why should they be looking at KZR? What are these numbers?
For sure. Well, I guess let's just talk about the valuation of Kalamazoo to start with, Kerry.
Okay.
In our scoping study and presentation we put out just in the last couple of days, we've also looked at what we call a peer comparison, looking at the EV per resource ounce of our competitors. And I think there's 10 or 11 similar type companies to us that we've actually shown in a chart as a peer comparison. The average EV per resource ounce valuation of those companies is sitting at around about $117 per ounce. Kalamazoo is currently sitting at 29. So we think there's great opportunity, great leverage as we now enter into the PFS or pre-feasibility stage, that Kalamazoo will be seen to be significantly undervalued. And that's one of the things that we're now actually talking to the market about. If you want to now look, though, at the scoping study itself, and as I first mentioned just before, we've based this on a very conservative gold price of 4,500. If you look at some of the numbers, we're planning that we're going to build a 1.5 million tonne per annum processing plant. And it's a very simple plant. It's purely a crushing and flotation projects. And so what that does is it treats the sulfide ore, puts it into a high-grade concentrate, we estimate it'll be about 25 grams per tonne, which is almost an ounce a tonne. And that will actually be shipped off to other processing plants in Asia. And there's a very strong demand for high-grade concentrate in the world at the moment. In particular, the Ashburton concentrate, very clean, low arsenic. So we believe, and having spoken to a number of groups, that it will be in very high demand. The amount of gold we're going to produce over the first 6 years is going to be about 524,000 ounces of gold, averaging about 73,000 ounces per annum. I think in year 5, 110,000 ounces is the highest number. Now, if you just look at some of the financial numbers, again, as I mentioned, that processing plant, very simple, capex, low capex of about $208 million. Pre-tax cash flow estimated to be about 750 million. MPV about 423 million, and a very healthy internal rate of return of about 47%. And then I guess if you look at the number that a lot of analysts look at, Kerry, in regard to the all-in sustaining costs, we estimate it's going to be about $2,180 an ounce produced. So that's very competitive. And because these numbers are so strong, payback of that $208 million of pre-production capex, less than 2 years. We estimate it's going to be at 1.9 years. So they're very strong numbers, Kerry. But again, that's based on a $4,500 gold price. We've had a lot of people saying, but tell us what it looks like at the current spot price. The numbers then change, Kerry, significantly, as you can imagine. Free cash flow goes from 747 million at 4,500 to $1.4 billion. NPV rises to 842 million. Internal rate of return, 74%. And payback is 1.2 years. Now, that's at the $6,000 gold price. But you can see, again, that leverage. And that's what I'm really talking about, Kerry, is in regard to site. And that's where we're going from this point onwards.
It's I lost you there for a second. I've got to love technology, but I got the majority of it. Hopefully, come on, New Orleans, be kind to me. Keep this going, because the numbers are stunning. But
and Kerry, if someone wants to look at those numbers, if they did miss out, we did release that scoping study yesterday or the day before, and there's a 10 or 15 page presentation that highlights all these numbers.
Yeah, great, because sometimes those numbers are stunning, absolutely stunning. And I think you said the capital cost of 208 million. Now, you don't have a lot of cash in the bank at the moment. How are you going to look at funding this?
Yep. So at the moment, we've got about $6 or $6.5 million of cash and ASX listed shares. So we're okay going forward. What I will say is that our major shareholders are very firm supporters of this project, and so I've been receiving very strong support from our major shareholders to fund this going forward. They see the numbers. They're very keen to stay involved. No surprise as well, Kerry, we're getting lots of interest and support from brokers and investors, high net worth individuals, family offices. So funding is not an issue for us. And I guess if you look at Kalamazoo's history over the last 6 or 7 years, got a very tight share register. We've been very well supported. Very few shares on issue compared to a lot of our peers who've got billions of shares on issue. I think we're about 230 million shares. So we've got a very tight share register. So we're very disciplined in how we spend money, and often also we'll realise assets as well to help us go through and to really look after our shareholders. That's always been a key focus for us. And you would have seen recently, Kerry, a couple of years ago, we spun out a lithium company and gave a lot of those shares to our shareholders. So we're always focused on our shareholder return,
which I think is fantastic. One of the things that I really want to understand, though, as well, is within this scoping study, it was on the Mt Olympus Gold Project, wasn't it? That's yes. What it's on. But you recently also acquired the Xanadu project from Platina Resources. So what happens with that? How does that fit into the mix, if you like?
Yeah. Regionally, we believe that there's great growth opportunity for Kalamazoo on the Ashburton Gold Project. There are a number of other resources that I haven't even mentioned. Peak, Zeus, War, that have got JORC resources. And we'll spend more effort on that over the next 12 months while we're doing the pre-feasibility, looking to see how we can bring them into the production profile as well, because we think that's important, because our aim is to extend the production life of this project as long as possible for the duration. So that's a keen focus for us. But I guess the other thing just to bear in mind, Kerry, is that, as you mentioned, we've only focused on the Mt Olympus, which is the largest deposit of the open pit, and that's where we're looking for that production profile of about 530,000 ounces. But we released just recently, a couple of weeks ago, an update in regard to the underground resource below the pit. That's about 170,000 ounces, and that's a resource. But also we put out an exploration target, and that's between, I think, about 200 and another 300,000 ounces. Now that's an exploration target, so we need to do more drilling on that. But what that means is that's potentially another 500,000 ounces that could be underneath the pit. And so that would, in effect, double the production life. That grade is looking actually quite high grade as well. So we think there's a real opportunity. Obviously, we've got to do a lot of work on the drilling, et cetera, and we understand that. But there's a real opportunity to double the production life of this, potentially make it a 1 million ounce project that might have a life of 12 years plus. And that's not even looking at some of that regional exploration opportunities that you mentioned, including that Xanadu project, which we purchased just to the south, which we think has got great potential. So we think this has got a real opportunity to be a long life project with some really key financial metrics behind it.
So, excuse me, do you, going back to, and excuse me if I'm not quite getting it, but I just want to understand, are you looking for sort of, I guess, some early cash flow to get Mount Olympus underway, get that early cash flow, which stops for too much dilution of shareholders and enable you to expand and go regional? Is that what we're looking at here?
Yeah. I think that's very well put, Kerry, because not only, if you look at it as a number of steps, there's the open pit, which is the easier one, then the underground, then there's the regional as well. Also, by building a project here, there's opportunities opening up the region as well, as to other deposits that might be there. Might be toll treating down the path. So it really is a stepped process, and what that means is that we need to spend a lot of time and money in regard to exploration and production profile as well. And where that's interesting, Kerry, is we're just actually building our team out as well. And so we're really trying to grow Kalamazoo, get the right people in the right jobs, and really resource it out.
Well, I think I might have a little scoop for my beautiful audience out here, but the news is probably out all over the market by now. But haven't you just put on board as a director somebody who's had a pretty amazing background, but really loved what you're doing? Tell us about that.
You love a scoop, don't you, Kerry?
I do love a scoop, but I think somebody scooped before me. But I just, guys, it's not everywhere at the moment. So sit up, take some notice. I think this is
well done,
what it's showing me. What it's showing me, Luke, is that to draw quality of this ilk means that this is, to me, is a real project with real potential to expand, develop. And I just love the fact that what you said before, there's been a very tight capital structure. You've been a very good custodian of shareholder funds over the years. But talk to us about this new appointment.
Yep, thanks, Kerry. We know we've got to spend more effort on exploration and building our resource, and we know we've got a key project at the Ashburton. So we're very pleased to announce that who's joined us as a director, but also as our exploration director, is Dr. Ben Ackerman. Ben previously, up until a couple of months ago, was regional exploration director for Newmont in Australia, for Asia Pacific. Before that, of course, Newmont has recently taken over Newcrest. Ben, for a long period of time, has been exploration manager, regional exploration manager for APEC, which is Asia Pacific area, for Newcrest as well. So Ben is extremely experienced, big projects in this whole region and area as well. And we think he's going to be a great addition to us to grow this company. And we're extremely pleased that we could get someone of Ben's caliber to come and join us on the board of Kalamazoo.
I think what it tells me as well, Luke, is it tells me that you're serious about the exploration potential of this whole area. So talk to us about the size of the prize, if you like, because we've focused a lot on the scoping study. We've focused on Mount Olympus, that project. That's just one of many. Talk to us about the size of what Kalamazoo has, because I mentioned again before that you took over the Xanadu project from Platina Resources, but you've got these other areas as well. So again, I think what I'm looking for is always looking at shareholder value, but what's the news look like? How do you manage this, and how big is it? What's the price?
Yes. Well, Kerry, at the moment, the Ashburton is a JORC resource of 1.44 million ounces. Our aim and ambition is to see if we can grow this into a regional gold camp of between 2 to 3 million ounces. And that would give us a long life of 10, 15, maybe 20 years plus at 70,000 ounces. So that's our aim. Can we grow this into a regional gold camp of 2 to 3 million ounces? And we need to put the right people behind us to actually achieve that. But we think we're on the way.
And I assume Dr. Ben Ackerman has been up to site, liked what he saw, did his own clearly he's done his own due diligence, but what's the feedback that he's given you on joining?
Yeah, of course, Ben has been to site, Kerry, while we were doing the scoping study. Look, Ben's very, very bullish, very positive. He thinks there's a lot of work to actually add to some of the due diligence that both De Grey and Northern Star carried out on the project during that option period as well. He's seen that work because, as I mentioned, we've got all that work back from De Grey and Northern Star. He thinks it's of excellent quality. We just want to add to that. So Ben's very bullish, likes the project, likes the area, and thinks there's a great opportunity to expand this into that camp. But we've got to do the hard work now, Kerry. That's there's no denying that. These things just don't happen. It's hard work, and we've got to put the money in the ground, do a lot of drilling, but we've got to build the team first, and the right team. And we think this is one of the steps to actually make that happen.
Well, good people attract good people. That's all I can say. I'm talking to you. Can you believe it, Luke? It's November. I mean, but I'll blink and it'll be Christmas. Is there a time when you can't work up there? Does it get too hot up there where you say tools down, let's just look at the data and look at planning?
Yeah, from here in Melbourne, Kerry, and it's raining outside. We can't understand why you can't work 12 months of the year. But look, obviously for your viewers, the Pilbara gets extremely hot, but not just that. During the wet season, you can get rained in, with drill rigs. So you try not to work from late December or mid-December to probably February, March. But we're planning to get a drill program up there before Christmas. We're pushing hard. We may or may not get there. We're just trying to get drill rigs and POWs as well. But we'll have a number of rigs on this project all through next year while we're doing this PFS. And again, as I mentioned before, some of the quality of work that De Grey and Northern Star have done, plus what we've done, we really believe we can fast track this pre-feasibility study over the next 6 or 12 months. We think we're a long way down the track already. And I think if anyone sees our scoping study and the extent of work that we've put into that, they'll understand we're very well advanced. So we're looking, as we did with the scoping study, to fast track the PFS as much as possible.
Now, just again for the newbies out there, difference between a scoping study and a PFS, which is a pre-feasibility study, and why you need to do it.
Yep. There's some requirements from the ASX in regard to, and a mining project usually goes through 3 phases, Kerry. You've got, as you mentioned before, a scoping study or a PEA, a PFS, and then either a bankable or a definitive feasibility study. The key thing with the pre-feasibility is you're now reducing your margin of error, or a scoping study is usually on a plus or minus 35%. PFS is much shorter, and of course a bankable or definitive is to push the button on raising the funding. That's
the let's go.
Yeah, let's go. But with the PFS, the other thing that you're required to do is that you are required to get all of your resources that you say that you're going to mine and produce. You need to get them from inferred to either indicated or measured. And so you've got to do drilling to actually tick that off. So you've got 100%. Very fortunate for us in regard to our open pit is that 83% of our resource is already in the indicated category. So we've only got 17% to get from inferred to indicated, and we've already designed a drill program to actually get that done, and we'll do that very quickly. So that's one of the key things you must do with the PFS, is you must get it all into indicated or measured. So we're well down the path on that. The other thing then is you're going very advanced in regard to your engineering and your mining programs, etc., just to try and reduce the risk on it going forward. So that's a lot of the work that we'll do, and over the next 6 to 12 months.
There was a couple of other things that I wanted to ask you about, and it's just gone straight out of my brain. Must be the New Orleans air. That's right. You said right at the start about a gold concentrate, and
yes.
And the sort of the premium you can get for that. And at the time, I was thinking, why are you doing a concentrate and not a doré?
Okay. If you look, because this is primarily a sulfide ore body, it's not oxide.
Okay.
And if you look to actually do a doré from a sulfide deposit, and this is just in very broad terms,
sure.
Invariably you'll go down an Albion treatment route, or like De Grey, Northern Star now at Hemi, you go through a pressure oxidization program or process plant. They can be quite expensive. And so what we've done is we've eliminated that step. And so we're just going to produce a concentrate, a float concentrate. So we're not producing doré. We'll then send off that concentrate, which is in effect, it'll be 25 grams a ton. We'll ship that off to one of the processing plants in Asia, and they'll actually process it into doré. So what it's done is it reduces our CapEx and our OpEx at this end. The flip side of that is that you don't get paid then 100% on the gold. You get anywhere between 90 to 95%, because that additional 5 or 10% is the processing costs at the other end.
Yeah.
But for us, it's a much more economic route, and we've actually looked at this in depth. It's a much better route for us financially, and again, we're always focused on what's the NPV, what's driving this project, what's the economics of it, and that's a better route for us. But more importantly, it's very simple and it's low risk, and that's the path we've taken.
Okay, all right, that's a decision. Final thing before we wrap up is, what's the biggest challenge right now for you? I wouldn't have thought anything with those numbers, but I just want to ask the question.
Yeah, the challenge is just, I guess, getting on the ground, doing the work, doing it in a pathway that is very efficient. What are the challenges? Gold price is always a challenge. If the gold price was to move downwards, but again, Kerry, that comes back to why we've used a $4,500 gold price. We want this to fly on that. If we fly on that number, well, everything else is cream on the top. So that again gives us the leverage to the gold price and to the resources. If we can increase the size of the resource, that again improves the economics going forward.
So guys, this is not, I mean, I know they're going to be doing exploration. This is development right now, and this is a pretty exciting time. That's why I wanted you to come on, Luke, and explain to us the numbers, because I wanted to also say congratulations, because you've been working hard in the background, and I really am pleased for you that the numbers are as strong as they are. Give us 3 reasons I kind of told them the numbers don't lie. 3 reasons people should be sitting up and really taking notice of KZR right now.
Yeah, well, we said we'd deliver a scoping study in 4 months, Kerry, and we've done it. The numbers look good. I guess that the next step is that if you look at the valuation of Kalamazoo, where we currently sit in regard to our peers, we think we're undervalued. So that's a real opportunity for potential investors and current shareholders. And I guess the third thing is, there's leverage to the gold price and leverage to the resource as we look to increase that. So that's they're 3 things that we think that add tremendous value to this project, and it's now up to us to deliver the next step, which is this pre-feasibility and further exploration growth, and that's what we're focused on, and that's what we're building a team around us to actually achieve.
Well, it's fantastic. When I'm going to not hold you to it, but you did say you do the scoping study in 4 months. You've delivered. When do you think the PFS will be out?
We're aiming for, I guess, end of 2026. Yeah.
End of next year.
9 to 12 months.
Okay. All right. Well,
and hopefully we'll bring it sooner than that. But that's our aim, Kerry.
That's what I like about Luke. And by the way, he's got skin in the game. He's been a very strong custodian of shareholder value. As he said, there's not that many shares on issue. Some companies have got over $1 billion. Kalamazoo have got just over 200 million shares on issue, I think.
230 million, I think.
Yeah. Okay. Well, it's been a pleasure to have you on the program. Wish you all the best for the rest of this year. And let's chat again early in 2026. But congratulations. Great numbers out for this scoping study.
Fantastic. Enjoy the jazz clubs in Bourbon Street too tonight, Kerry. I'm sure you will.
Maybe.
All right.
Thanks so much, Luke.
Thanks, Kerry. Bye.